there seems to be absolutely no letting up when it comes to the stock markets, as you can see from the chart in front of you. I'm going to ask the question, does this continue? Will we see another double-digit growth year for stocks? What are the risks? And how am I positioning going over the next year? If that sounds good, stay tuned because I'm going to show you my game plan, my trading plan for 2026 in this video. So as you can see, the stock market really has been up only from late 2022. Obviously, we had the big drawdown here that was due to Trump coming into office and announcing the tariffs. And obviously that gave the stock market a wobble. This is probably one of the best buying opportunities you're ever going to see in the stock market. Obviously, being in a bull market, coming back to retest what was a longer term trend line and getting a nice reversal. And we're going to ask the question, will we see something like this again? Because I do think at some point there will be decent buying opportunities this year. I think probably we get a decent buying opportunity around about April of this year, and then potentially at the end of the year as well. So these will be periods that I look to de-risk into. I don't think we're quite there yet. I do see us going higher in the short term. And certainly if we actually go down on the chart to the lower timeframes, we can actually see the S&P is actually breaking out as we speak. So we've got the S&P that made new all-time high as recent as yesterday. So will we see another all-time high today? Potentially we will. We're pulling back a little, but that's okay. I do think that the stock market likely pushes on. And what is the catalyst for this? I think the major catalyst for being bullish on stocks in 2026 is the fact that right now the market is expecting 0 to 1 rate cuts over the course of 2026. I actually think in reality it will be far more rate cuts than that. We know that Jerome Powell is going to be leaving as Fed chair in May, and we know that his successor is going to be handpicked from Trump. He's going to be a Trump administration yes man, and we know that Trump wants rates slammed to zero in no time at all. So you can absolutely bet there will be lower interest rates. What could potentially be the risk to this? Well, the risk to this could be if inflation starts to accelerate and therefore caps the Fed's ability to cut rates aggressively. However, with the oil price falling, obviously there's been, I think, probably a long-term bearish catalyst for oil prices in the sense that US has now control of Venezuela oil. So I think speculators will probably be thinking, well, that's additional supply going onto the market. Yes, some countries will be probably looking to curb their output of oil in response to this and obviously keep the price at a certain level. But I think certainly in the near term, we could see inflation maybe coming in soft, which should then get the market pricing in more rate cuts. And I think a sort of more dovish outlook in the Fed policy over the next year is probably what drives prices higher over the short term, certainly into maybe some sort of top in late Q1 or early Q2. And if we just take a quick look at the US 10-year yield, we can see this is really a decent benchmark for what the market thinks that rates are going to do. Obviously, at the moment, we hit that 4.2% level, which was a pretty major level last month. And it seems like we're starting to come off. I'm going to be keeping a close eye on this because if the 10-year yield starts to drop, and certainly if this bear flag that I've drawn in does play out and we see a move down into the threes under 4%, then it's really hard to see the stock market not catching wind of this and making an all-time high again and pushing on higher. And then potentially at that point after this move, we see maybe rates start to retrace, and that's when we get the correction in the stock market as people then shift their focus from a more dovish Fed onto other risks. Other risks could be maybe inflation starts to reaccelerate a bit, maybe unemployment starts to tick up a bit more, and the market starts to maybe get concerned about a recession. But I think for now, what's really going to drive this market is what is the Fed going to do next year. That's why I'm keeping a close eye on this. also the VIX. It's important to pay really close attention to the VIX and see where we are. And we've got the VIX pretty low here. I mean, anything, I've said this before, but anything really under 19 on the VIX is where you get your strong runs in the stock market. So, I mean, if the VIX spikes up here to anything below 19, so if it comes up to 17, 18, this would be a great area to look for longs in the stock market. So myself personally, I'd be playing any spikes in the VIX as opportunities to buy the dip in stocks for now, unless we actually see some sort of prolonged sort of upside, which we just haven't seen yet. This would be a more prolonged period of upside in the VIX. But these sort of shorter term spikes, these sort of one-off spikes, are usually very good areas to buy the dip in stocks. So keep an eye on the VIX. But like I say, anything certainly below 17, 18, there's nothing really to worry about. And if we get pullbacks in the stock market and the VIX is still down here, provided it's not sort of consolidating and spiking higher, then we can look to get in and add to some stock positions, or certainly that's what I will be doing myself. So just going back to the S&P then, it looks like we've formed a bit of a, where we've got this ascending trend line. We've obviously got the flat top. So it looks like the S&P's next move probably be some sort of breakout. Can we come back down a little bit lower here? Yes, but as long as we are above the low from Monday, I wouldn't be too worried. Can we sweep that low? Yes. Could we come down and consolidate sideways longer? Yes, we could, but at some point I'm thinking we spike a bit higher and potentially, I mean, from here into the levels I'm looking at, we're talking around about sort of a 4-5% move. Maybe we come up a little bit higher in this spike here and get everybody really excited before then see some sort of larger correction. But yeah, I think a lot of people are a little bit nervous, a little bit worried here, a bit bearish going into this year. Obviously, there seems to be the most consensus, bubble in AI that we've ever seen before. I mean, when everybody's saying it's a bubble, you've got to question yourself, is it really a bubble? I mean, valuations right now in some of the big cap stock names are nothing to really be too alarmed by. So I think until we really see some sort of extension, and I think what will happen is that the bears will get shaken out and they'll be forced, obviously, close their shorts, buy back in, and we'll see this squeeze higher. We'll flush those out of the market. People will start to get bullish for a big year. Then we'll see the correction. And then after that correction, we'll see the recovery with the rate cuts and the new Fed chair coming on, and with people starting to get optimistic and almost saying, well, that was it. But then I think the market will have a sting in its tail again later on in this year. So this is sort of broadly how I'm playing it. We know midterm years historically tend to be quite flat, tend to be quite choppy. And that's why I will be looking to de-risk once we break above these all-time highs and sort of flush out the shorts and the sellers from this level, get people chasing the market. That's when I'll be looking to take the other side. So yeah, that's pretty much my trading plan. Nasdaq, very, very similar idea, similar path drawn out. I think we push a bit higher over Q1, pull back into Q2, see a big recovery. So, you know, these are really your trades to be having, or certainly my trades, potentially looking at a 7-8% move to the upside, de-risking, and then looking at another potentially up to 30% move from whatever low this is. Obviously, if we don't come down that low, potentially we just flush these lows from November here. Then, of course, the gains won't be as extreme, but you could still be looking at a nice double-digit move, and I think we could trade towards the 30,000 handle on, the 30 handle on the Nasdaq, and then potentially we see some volatility going into the end of the year. You've always got to be mindful of the risks, and I think the main one right now is unemployment spiking, things like the yield curve starting to, which have inverted now, uninverting usually tends to precede recessions. And I'm just a little bit worried about sort of what's going on with the economy in terms of wage growth being very stagnant. Costs are rising. It feels like everything's getting super expensive. Obviously, incomes are not keeping up. And I think eventually something will happen that triggers the market to come down a lot further. But I think over the next few months, the risks are fairly known, and we know what to look out for. And I just think the stock market will be on business as usual, especially for the first half of this year. So that was really it. That's really what I'm looking at. And I mean, to be honest with you, it looks like the Nasdaq is starting to break here on the daily. You can see we're actually breaking out the top side. Obviously, I'd want to see this breakout held now and to see an extension above these highs. So really, I'd want to see, if I just put on a horizontal line here, I'd really want to see closes above 25.8 on the Nasdaq, which would then give me more confidence that this is going to play out. Obviously, we could consolidate a bit more. It might be that we need to come back down and test this 100-day moving average and start, and maybe this gets drawn out a little bit more, and we do something a bit more like this, and then go something like this before that pullback in sort of late Q1. But this is my base case. This is what I'm expecting to happen right now. I don't see any reason really to sort of change any of this. And like I say, potential top coming in sort of February, March, late Q1, and a bit of de-risking pre-summer, and then eventual recovery. So I'm going to look very quickly at a few stock market names that I like. I want to keep this one fairly short, so I'll actually come out with a list of stocks for 2026 very, very soon, hopefully over the next week, with, say, for example, my top 10 picks. But stocks I do like here, I mean, Tesla is one that I am buying this dip on Tesla here. Obviously, Tesla, a lot of people getting very excited when it started to break above 470. I myself was heavily in Tesla and started to sort of de-risk in the low 400s, thinking we might sort of pull back and get some retests into the 350 area. We hadn't seen that. We've actually seen the market show a lot more strength. And I'm now looking at this and I'm thinking we could probably go as low as this 786, which would take us around to $400. So for me, it's really just a case on Tesla of sort of scaling in here. So for example, taking a box like this, I've already sort of started to scale in, but it's just saying, look, I'm happy to DCA in this area. Obviously, if we do actually break this low around about the 380, then that will get me concerned. And when I say a break, I don't just mean a quick sort of wick down to retest 366. I mean consolidation under these lows would actually be more of a cause for concern. But I don't think that's happening with Tesla. Obviously, it's got the narrative, it's got the story, the deregulation. Obviously, the Trump administration is back on side with Elon. That the Trump and Elon seem to be getting along well again. And yeah, I think things are looking promising for Tesla. Obviously, Jason Huang, the Nvidia CEO, has come out and said that Tesla has the best AI stack out there. I think this is relating to autonomous driving. So definitely, the Nvidia CEO has sort of showed his hand in terms of picking a winner in terms of the autonomous driving race. Robotaxi is making big progress, and I just think this could be Tesla's year to really start to sort of push on to the next level. If we kind of look back over the years, we can see it has been some consolidation sort of in this range now, and potentially we start to see extension up to some of these higher targets if we can sort of thoroughly sort of break through this 500 level. So Tesla is one I like here. Other names that I'm holding, which I obviously like, Google. I think if you're not in Google, it's just a case of just waiting for an entry. Potentially we come back and test this 20-day moving average at some point. But yeah, Google, there seems to be no letting up. It looks like it's about to go up for another all-time high. And a chart like this, you just have to ride really as a trend, just looking to hold full position. Nvidia, obviously a big, really benchmark for AI. And we can see Nvidia starting to look strong again here. It's followed this sort of these lines fairly nicely. And I think Nvidia probably attacks all-time highs very soon in Q1. Palantir as well is another one I like here. It's looking, sort of higher low. What you'd really be looking for on Palantir is just a break of this trend line here. So if this trend line can break out, then obviously we can see acceleration and back into price discovery Palantir. Obviously, Nvidia and Palantir, famously ones that Michael Burry, the big short investor, is short and has been fudding relentlessly. But I do think there will be a lot of liquidity above these highs here. And there'll be a lot of forced buying if the market does push up that way, which I think it can do over the next few weeks. Meta as well is another one that I've been accumulating. So I think Meta, similar to Tesla on this pullback, is one of these big stocks that's pulling back. I think anywhere under this low, there will be liquidity sat, and it can be a nice sort of DCA longer term investment. Meta, one of the big Mag 7 AI companies that I think will reach new all-time highs likely later this year, if not at some point. So yeah, those are some of the big ones. AMD as well. So does AMD, I think the question is, does it come down and fill this gap? If it does, I think that is an absolute no-brainer buying opportunity. Let's see. Obviously, it should probably retest this 100-day moving average again. Let's see if that holds. If it breaks, then we could be in for a deeper correction. But certainly, I like AMD for the long term. Their chips have had some progress as an alternative for shortages on Nvidia's chips. So I think that's a fairly good one. I'm just looking down the rest of my list. Like I say, I want to hold a few back for a stock video that I will come out with very soon. The other big one is Amazon, if I can find it. I think that is one that, for me, I just have to have exposure to. Seems to be performing nicely, looks to be breaking through what is a sort of key level here around this sort of 240 area, and looks like it wants to go for new all-time highs at some point. So yeah, I'm going to wrap it up there. I will cover some smaller caps and mid caps in another video, just to give you a really quick preview of some of those things like IREN, some of these hyperscalers, data centers. I think these have the potential to come back to all-time highs, certainly if we see Nvidia lead the charge and go that way over the next year. And yeah, these are ones I'm looking to position into on this pullback. You've got IREN, you've got NBIS, which are probably the main two, which I think could have strong years. Obviously, these are a bit more high beta in terms of the AI trade. And it's really, for me, that is still the main trade to look to profit from. It is still looking to profit from the growth in AI. And that seems to be where I think most of the mind share will be this year. So yeah, just a recap then. So the stock market looking good. Just finishing off with the S&P, looks like we are about to break out to new all-time highs. Like I say, as long as the yield, 10-year yield, stays down and starts to come down a bit further, as long as the VIX stays below 19, I think it's only a matter of time before stocks do break to new all-time highs. And yeah, I'll just be playing it sort of week by week, day by day, trying to take in all of the latest available information, and yeah, obviously updating my outlook for the rest of the year as things develop. But for now, I'm thinking bullish Q1, potentially some correction maybe in Q2 of this year before acceleration into the end of the year. So yeah, I'm going to leave it there. Thank you very much for watching. Like I say, I will come out with a top stocks for 2026 video very, very soon. Obviously, I've shared with you some of the large caps that I'm in. So just the disclaimer, as always, none of this is financial advice. It's very much for entertainment purposes. And yeah, obviously, this is not a buy recommendation or sell recommendation for any stock or any index. So yeah, I'll just add that in at the end. If you have enjoyed this content, please do like the video, and I will catch you all on the next one. GM.